Welcome back. You're watching Market Fatafar right here on ET Now show where we talk about all the stocks buzzing in trade based on news flow as well as on technicals. No doubt a lot of management talking to us given the fact that there's heavy news flow. But let's bring on board our team of researchers as well as my co-anchor Vinny Motiwala. And we have in the team of researchers, we have Ankita as well as Ansh joining us. And on the technical front, we have Dhwani Patel. A very good afternoon to all of you all. And Dhwani, let me come first to you. The first stock that you're going to talk about is Granules. How is this one looking on the charts to you? Mid-cap company when it comes to the pharma space. But on the charts, do you think it will do cartwheels?
It's absolutely what we are seeing here on a weekly chart on Granules is that the stock is having an upward trajectory, and this particular week we have seen an upward bounce coming in on this counter. 20 week of an exponential moving average on weeklies and 50 weeks it's trading above the same. On a daily chart also today we have seen about 3.4% of an up move in this counter. It's there to continue over here further. From current level, one buys into it for a target of 360. The stop loss that you need to maintain on the lower side is of 325.
Right, let's move on to the next stock that is in focus, and this one is Birlasoft. On the back of its numbers, better than expected numbers came in from the company. When you look at it, the Q2 performance was quite strong. Revenue grew by 3%. In terms of USD terms, it came in at $158.3 million. Deal wins also was something that improved for the company as well. Overall, when you're looking at the EBIT margin front as well, that also expanded by 60 basis points on a quarter-on-quarter basis to 14.2%. And they guided for Q3 the growth to be slight bit neutral, but Nuvama has upgraded the stock for FY24-25 EPS target. They've given us 4.6 and 4.8% respectively on higher growth as well as margins, and they believe that that could be an upgrade multiple to 20 times from 18 times previously. MK2 has upgraded the stock, so keep an eye out on Birlasoft today. Surely, look at the pace that we've picked up in trade. The stock has picked up in trade as well. It's up 6% as of now, almost near the day's highest point.
All right, let's shift focus to a stock that is buzzing but not on back of earnings, and that's Markson Pharma. If you look at that particular stock, at one point in time it saw an uptick of as much as 5.8%. Let's see what the stock is at right now. It is around 3.5% higher. The company said that its manufacturing facility in Goa has successfully undergone inspection from the German health authorities, and the German authorities have not found any critical or major observations but have a few recommendations or minor points, is what Markson said. If you look at the stock price today, is gaining for a third consecutive session, and you can see it on your screen, 3.5% uptick on back of this positive news flow coming in for Markson.
Let's move on and talk about the next stock, and this one is on the technicals. Dhwani, you've picked out Indiabulls Housing Finance for us. Last 6 months, we've seen a decent return of 44%, but specifically since the beginning or end of September, we're seeing a bit of a decline coming in the stock. Is it time that, maybe again the stock will bounce back, or is it time for some correction?
Yes, it's actually the time for the stock to bounce back from the current levels. What we are seeing technically on the chart is that 150 to 155 of the range is where the stock is holding a good support level over here. From current levels, one can go long into it. 180 is a short-term target over here. Above 180, the stock will give further momentum to 190 as a target. On the lower side, the stop loss that one needs to maintain over here is of 155.
All right, moving on, Ansh, let's talk about DCB Bank, and I believe this is an earnings candidate. So how are the earnings for DCB Bank?
Yes, so DCB Bank has displayed a strong performance in the quarter two earning with a profit of 126.8 crore, marking a 13% increase on year-on-year basis. Pre-provision operating profit reached 210 crore, up 15% from previous year, while provisions totaled around 40 crores. In terms of asset quality, GNPA ratio increased slightly to 3.3% compared to the previous quarter's 3.2%. And NPA ratio also rose to 1.28% from 1.19% on quarter-on-quarter basis. Net interest income has reached 208 crore, showing a decrease of 5%. Now, if you see the stock chart, the stock is hovering around its horizontal support zone, which has been intact to form 5 to 6 months now. Also, as per RSI, stock is trading at 30s level, which is almost an oversold region.
Surely keeping an eye on DCB Bank. Let's move on, talk about L&T then, Ankita. This one too is an earnings candidate.
That's correct, Winnie. L&T posted its result, post-market hours yesterday, and a solid set of numbers coming in for L&T. We did see, a strong set of numbers. Revenue was in line, but EBITDA and PAT were a beat on the estimates. Now, the management is also confident that they will surpass their earlier guidance, and they have guided for an order inflow of around 10 to 12% and a revenue growth between 12 to 15%. Now, they have also revised their core margin guidance to 8.5 to 9% from the 9% guided earlier. Also on the back of that, CLSI came out with a note, and they are maintaining a buy on the counter with a target price of 3,600 rupees. They have, their guidance is that, they have given a strong beating on the Q2 numbers that on the street estimates, and the inflows are also up by 72%. The execution is up 25% on a year-on-year basis. Also, the prospect spikes led by GCC capex and entry into the semiconductors has really helped in their growth. But weak link in L&T's Q2 FY24 results was its E&C margin, and that's the weak link for the company. And we did see the stock climb up almost a percent in trade early in the morning, but it has cooled off now, and it is now down more than 0.5% in trade. But L&T will be in focus on the back of its numbers.
Right. Moving on, Dhwani, let's talk about United Spirits, and how is this one looking on the charts to you?
With the festive season kicking in, this stock is looking good to me right now on the charts. The stock is already taking its support at a 50-period exponential moving average. We definitely saw some poise coming in this stock around 1100 levels, but it is again ready for an uprise. From current levels, one can go long into it. 1100 is the first target that we'll look up at with a stop loss of 1020, which gives us a 1:3 of a risk-reward ratio here.
So in high spirits is what we're expecting for United Spirits. That's the call coming in from Dhwani. Let's move on, talk about Aether Industries. This one is buzzing away in trade as well today on the back of its numbers. When you look at it in terms of the stock move, the stock actually jumped up as much as 7% intraday today. But look at the stock, it has given up most of its gains. Though the profits of the company in Q2 zoomed by around 39%, revenue saw growth of around 17% as well on a year-on-year basis, while in terms of the operating performance, seems like a decent performance coming in on that front as well. 21% uptick in terms of the EBITDA, and margins seeing an expansion of 100 basis points as well. So Aether Industries, all in all, it was a decent number that came in from the company. We saw a sharp spike up in the stock, but as of now, trading at the day's lowest point, down almost 1.5%.
Right. Moving on, let's talk about CE Info Systems, and that particular counter also is in focus on back of its earnings. If you look at the stock, it saw an uptick of as much as about 6% on an intraday basis. If you look at the profit as well as sales for this particular company, it was trading higher on a quarter-on-quarter basis. It announced its earnings post-market hours yesterday. The consolidated profit saw an uptick of as much as 2.6% on a quarter-on-quarter basis. Revenue from operations saw an uptick of as much as 1.9% on a quarter-on-quarter basis. If you look at the year-on-year performance, definitely a sharp uptick coming in the year-on-year performance, but quarterly performance also was pretty strong coming in for MapMy India or CE Info Systems. On back of that, as you can see, the stock was trading higher at one point in time. It was trading higher by about 6%. It hit an all-time high level as well.
Okay, surely keeping an eye out on that stock today in trade as well, keeping it on that radar. But let's move on and talk about the next stock, Dhwani, and that is IOC. You picked out for us on the charts. And what are the charts indicating for this one?
Since last few sessions, we are seeing definitely an upward move coming in on this counter. The stock has made a bottom at 87 and moved up to 92, but still price action data suggests that there is more fuel left to the fire. Ones who are already holding a position, for them suggestive stop loss now is of 90, and we are aiming for a target over here of 96.
Alright, so that's the take coming in on IOC. Actually, let me just quickly just try and mark Safari, because Safari just came out with its numbers, but it's not because of the numbers that there's a sharp spike in the stock. They have announced a 1:1 bonus share issue as well. Along with that, the company said they're going to raise about 500 crore rupees via QIP. They are going to look to invest about 65 crore rupees in their arm, Safari Manufacturing. So all of these reasons are is the reason why you can see the strong performance for Safari Industries. 4.5% uptick as of now. Good numbers also coming in, but bonus share issue, also the fact 500 crore rupees they're going to raise via QIP. Vinny, that is the reason why the stock is getting fueled as well right now.
Absolutely, keeping an eye out on Safari Industries. But let's move on to the next one, and Ankita, Amara Raja, this one is in focus on the back of its numbers.
That's correct, Vinny. Amara Raja is in focus today on the back of its numbers, and let's look at what the numbers were. It reported a jump in its second quarter profit, as improved demand for its product really helped offset the higher expenses. Now, also, the improved rainfall in September led to a recovery in rural demand for them, particularly for the two-wheelers, leading to increased battery sales for Amara Raja. Also, Amara Raja's clients such as Maruti Suzuki have also boosted production as the semiconductor supplies have improved. Auto ancillary companies benefited from the improved automobile production, which was hurt last year by the chip supply chain issues. And on the back of that, decent set of numbers coming in for Amara Raja. It is up almost 1% in trade today. And also the fact that they're further invested in their wholly owned subsidiary of the company, which is Amara Raja Advanced Cells Technology Private Limited, and approximately an amount of 500 crores. And on the back of this news flow as well, the stock is going to be in focus today.
Surely keeping an eye out on that one as well. But let's move on and actually slip into a very short break right now. We'll be back with more stocks after the break.
Welcome back. You're watching Market Fatafat on ET now. Let's continue taking through stocks that are moving in trade. And Dhwani, let's talk about LIC Housing Finance. How is this one looking on the charts to you?
LIC Housing Finance, we're definitely seeing some pressure on it today. It's more of a sideways movement that we are not seeing a breakout of the morning range that we've already seen on the counter. But on the short term over here on a daily chart, the stock looks good. Above 460 is an ideal point to buy into this particular counter for a target of 480. The stop loss that one can maintain over here on the lower side is of 450.
Okay, let's move on to the next one. And Ansh, you picked out Max Financial for us. So why is this one in focus today?
So Max Financial Company reported their consolidated revenue, their revenue reached 101 crore, which is up from 93 crore in the preceding year, reflecting steady growth here. They reported robust consolidated profit of 170 crore, indicating a substantial increase from previous year's 61.6 crore. The company achieved a remarkable growth in online sales with a notable 170% surge, highlighting the company's digital presence and customer engagement. In a move to expand its reach, Max Financials has partnered with two new banks, AU Small Finance Bank for digital partnership and South Indian Bank. Additionally, they have added 30 new partners in the first half of FY24, further strengthening their distribution network and customer outreach. Despite of all this positive, stock is trading 2 to 3% lower today.
All right, that's Max Financial for you. But Dhwani, let's talk about ONGC then, and how is this one looking on the charts to you? Because given the fact that ONGC also is dependent on what happens to crude oil prices, you have the windfall tax revision that you have on a fortnightly basis. But what's your take coming in for ONGC on the charts, but?
So very short-term trade over here, more of like a 1 to 2 day kind of a trade is what comes up in front of me right now. On an intraday chart, we are definitely seeing some action coming in on this counter. From current levels, one can buy into this counter for a target of 190 and keeping a stop loss on the conservative side at 185.
Okay, let's move on to the next one. And Ankita, you've picked out Tata Consumers. This one is in focus on the back of its numbers. How were they looking like, as well as what is the commentary indicating when the management spoke to us?
That's correct, Vinny. Tata Consumers is in focus on the back of its numbers, and the numbers are largely in line. Revenue, PAT and margins all came in line with the estimates. Now, if you look at the outlook, as we mentioned, the outlook is, they see a stable outlook, in demand trends in India business, and they remain cautiously optimistic. And the management also said that the branded tea and coffee face demand headwinds in the international markets, and they also expect to complete the Tata Coffee merger in this financial year. So that was the outlook on the company, and we did see the stock take up 1.5% in trade today, but right now it is trading towards the day's lowest point, just up 0.3% in trade.
Okay, let's move on and talk about the next stock, and that is Paradeep Phosphate. This one is in focus on the back of its numbers as well. Revenue saw a growth of 21%, coming in at 3,683 crores versus last year. Now, this time the company has actually swinged into a profit. They reported a profit of 89 crores versus a loss last year of 119 crores. So obviously, clearly, that moving to the profitability side and moving to the green, even on the EBITDA level, they've turned into a profit side as well. So EBITDA came in at 256 crores versus an EBITDA loss of around 39 crores. Clear improvement in terms of the operating performance of the company is keeping the stock abuzz, up 3.4% as of now.
All right, let's talk about Jubilant Ingravia, because that particular counter came up with this number short while ago, and if you look at the numbers, they were pretty disappointing when you see on a year-on-year basis. The revenue saw a downtick of as much as 22.2 crore rupees. This is the consolidated numbers. It's coming at around 1,011 crore rupees, as again 1,299 crore rupees. If you look at the profit, it's coming lower by about 31.8% on a year-on-year basis at about 57.49 crore rupees. If you talk about the EBITDA, that one also has seen a downtick on a year-on-year basis, 109 crore rupees versus 148. And if you look at the EBITDA margin, it's coming at around 10.8% versus 11.4% on a year-on-year basis. As you can see it on your screen, the stock did see a sharp dip right after announcing its number, but now it's trying to recuperate some of the losses. It's now trading lower by about 1.7% as we speak.
Okay, let's move on to the next stock that is in focus today, and that is MRPL Lunch, and this one also on the back of its numbers.
Yes. So, company reported 20% year-on-year decrease in revenue, which stood at 22,843 crore. They showed a significant turnaround, posting a profit of 1,051 crore compared to a loss of 1,779 crore in the previous year. They also reported EBITDA at 2,138 crore, contrasting with the EBITDA loss of 1,994 crore in the previous year. Also, there was a total reduction in interest for long-term borrowing by around 2,160 crore, that is from 13,783 crore to 11,625 crore as on 30th September. Also, if you see the chart, stock has been hovering around the support of 50 DMA, from which it has given a bounce 4 times recently. So keep an eye on the stock.
Okay, surely keeping an eye out on MRPL. Let's move on and talk about another company that is in focus on the back of its numbers, and that is Star Health. Seems like nothing exciting came in terms of the numbers here, because what we're seeing is the stock has seen a sharp downtrend coming in the stock today as well. When you look at the numbers, gross premium written is at around 3,731 crores, which is up 17%. Net premium written is up 17% as well. Profits of the company up 35%, and operating profits of the company, when you look at that is coming at 72 crores versus 110 crores. So let's keep an eye out on Star Health. Also, CLSA has come out with a note on Star Health. They are saying that they are maintaining a buy with a target price of 700 on Star Health. They're saying that the monsoon diseases are quite high. That is a raise for FY24 loss ratio for estimates as well. They are guided for a retail premium growth of 20% for FY24, and amicable resolutions of tussle with the hospitals is something that they are watching out for as well. So keeping an eye out on Star Health today on the back of its numbers as well as a brokerage.
Alright, let's move on and let's just mark the rupee right now on the bottom of the screen. As you can see, 83.275 is where the rupee is. It's hit a one-year low versus the dollar. Remember, the record low level coming in for the rupee is 83.29, just whiskers away from those levels. 83.28 is what the rupee hit on an intraday basis. It's a one-year low against the dollar. Last year in October itself, the rupee had hit a record low against the dollar, and right now is just struggling around those levels. 83.275 is where the rupee is at, and yes, every single paise counts when it comes to rupee rate against the dollar. Right now at one-year low against the dollar. But let's shift focus and let's talk about Kaynes Tech. And yes, every rupee counts, isn't it, Ansh? And this one is reacting to his numbers.
Yes. So Kaynes Technology has reported impressive results, with revenue reaching 360 crore, reflecting a remarkable 32% year-on-year growth. PAT increased to 32.3 crore, showing a significant rise of 54%. EBITDA showed a notable 13% growth here. Company's order book has surged to 3,461 crore, which is up from 3,000 crore in Q1, indicating strong demand and business growth. The order inflow has increased, reaching to 274 crore per month compared to 216 crore during the first quarter, showing a positive trend in the new business. Mr. Ramesh, MD of the company, has said that company continues to invest in upgrading its existing facilities and executing new expansion projects in phases in FY24. But despite of all the positive, the stock has touched a one-month low and is trading around 2 to 3% low.
Alright, so that is Kaynes Technology for you, and that is indeed the last talk on this edition of Market Fatafat. Thank you so much, Dhwani, for joining us in the show, as well as Ankita and Ansh for taking our viewers through all the stocks buzzing in trade. And yes, rupee languishing near the one-year low levels, but for now, we are out of time on this edition of Market Fatafat. So goodbye from Winnie, myself, and the team that put the show together. Stay tuned, closing trades coming up next.